Good morning, Steve Reed in Chicago with the Morning Grain Comments. Well, happy Friday to everybody. Hope everyone has a safe and nice weekend. This week will be remembered as far as a week in which funds came in and bought the grains as an addition to their inflation portfolio. At the highs, we ran out of buying, and the market kind of settled back from an overbought situation. There were two headlines yesterday that might have offered resistance to the grains. The number one was that the mandate EPA announcement could finally come out and basically delay implications of the refiners' mandate. And some people thought that that could actually mean that 2022 numbers could be below what the market is thinking. The second is the broad statement by the President of the United States that they may do some kind of diplomatic boycott of the Chinese Winter Olympics. Don't know the specifics of it, but if it's extreme, I don't think the Chinese are going to like that much. And we go back to the 1980 Carter embargo, the Russia Olympics. All that did was set U.S. agriculture back 25 years. As far as the data this week, again, export sales numbers, export inspections are not at the pace to reach USDA's goals. The market could see a drop in both corn, both soybean and wheat exports on the USDA December report. People are holding out that corn exports might be higher, but right now we're seeing Argentina dump quite a bit of old crop corn onto the marketplace. Argentina crops are also rated, both corn, beans, and wheat, higher than a year ago, and Argentina has about 18% of their wheat harvested. Specifically in the beans, I think the market is concerned about a higher U.S. carryout and how much China beans will buy from the U.S. That offers resistance at $13, but we could find support at $12.50 because of the very positive U.S. crush margins. Also, in the corn market, kind of a trading range. We're not ready to go over $6 because of maybe some drier South American weather. Looks like Ukraine and Argentina will be offering some corn for export, which could cut into our export numbers. But domestically, our bases are very strong as ethanol margins are very positive. We're already looking down the road as far as next year and see if farmers are going to plant more or less corn acres next year because of the high cost of plantings. We also saw in the wheat market, Australia's wet, and that is raising the Australian futures market and raising concern about the quality of their exports. We also saw the Matif making new highs in the wheat market, and Russia down the road looks like they're going to increase their export tax, which could make them out of the export market. So one or two things have to happen to wheat: rally to slow demand, or the wheat market could get some export demand here in the U.S., which could also rally prices. Outside markets, dollars higher, and the crude is lower. A lot of talk about both U.S. and China releasing some of its strategic oil reserves. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.